Hi, I'd like to welcome Ross Stevens, who's the founder and CEO of Stone Ridge Holdings Group, which manages more than $20 billion in alternative investments. Around 2015, as they started to personally own a lot of Bitcoin, they couldn't find a custodian who could satisfy their level of fiduciary standards. That began a journey that is now NYDIG, the New York Digital Investment Group, which Ross founded and is executive chairman of. Today, NYDIG manages over $6 billion of Bitcoin, all for institutions. And it's a full service, vertically integrated, Bitcoin only financial services firm. Ross started his career at Goldman Sachs working for Fisher Black after earning his PhD in statistics and finance at the University of Chicago, writing his dissertation under the direction of Nobel Prize winner Gene Fama. Ross did his undergraduate studies at Wharton, and Ross is the chairman of the Stevens Center for Innovation in Finance at Wharton, which he founded. More importantly, Ross is a friend of mine. He's been an important partner and a trusted guide to me and to various members of MicroStrategy's leadership team as we navigate our own Bitcoin journey. So please help me welcome Ross. And Ross, thanks for joining us today. I'm really excited about this conversation.
I am too, Michael. Thank you very much. It's a pleasure to be here. And like each of the many conversations you and I have, I'm sure I will enjoy and look forward to this one.
Okay, so let's get right into it. In a sense,
let's do it.
This whole conference is about reserve assets. It's not about property, plant, and equipment, or other parts of a firm's business strategy or balance sheet. It's about reserve assets. You and I are both CEOs. We have a lot we need to focus on. We have a lot we need to decide every single day. Why should we even care about reserve assets?
Well, I think a CEO has two jobs, right? Executive, but also capital allocator. The first one is obvious. The second is more important. Capital allocation is a CEO's most important job. I think all of us CEOs work in capital allocation. In fact, we specialize in it. Whether we're good at it or not, we specialize in it. And said differently, whether or not we choose it, capital allocation chooses us. And I would say a capital allocation framework for a CEO used to be one thing, which is how do we turn our liquid assets into illiquid assets, and how do we turn our illiquid assets back into liquid assets? You know, are we going to buy something, or are we going to sell something? Are we going to fund a business, or are we going to close a business? What's changed, though, is that it's now also about our liquid assets as their own thing, your cash reserves, because what used to be safe and not volatile, it's no longer safe and it's highly volatile.
Well, why is this framework so relevant now?
I mean, it's always been relevant. I mean, what's relevant is the urgency. What's new is the urgency. What's new, I think, is the outsized role of central banks in all of our lives, and the role of central banks on corporate balance sheets. I mean, cash is now a liability, no longer an asset. And I think that has profound long-term implications for corporations. I mean, we can go back, we can start in a lot of different places, but we can go back. I mean, one of my favorite Federal Reserve sort of central bank persons is Hayami, Governor Hayami from Japan. He's not a name you hear a lot about now, but he led the BOJ in the year 2000. And he joined right out of college, post-war, 1947. It's hard to imagine Japan back then, but they were in a hyperinflation. Imagine Japan in a hyperinflation. And those hyperinflationary years when he was out of college left an indelible scar on Hayami, understandably. And as he was rising through the ranks of the BOJ, he was known for repeating the phrase, if you debase the currency, you debase the country, in his internal meeting. So that was Hayami. He was a strident anti-inflationist. Now, if we think about Japan back in 2000, right, it's 10 years after the bubble burst. Their benchmark rate, basically their Fed funds, had gone from 8% to zero. And given Hayami's personal background, his anti-inflationary stance, he thought free money was nuts, right? So he decided to do something about it now that he was finally in charge. He took the radical step of raising rates 25 basis points. I mean, pretty radical.
Ouch.
So he made money slightly non-free, okay? But he didn't just do it. It's really what he said. He kind of had this speech and he thundered, risk must be priced. Risk must be priced, which is really academic jargon for saying the market must determine the price of money, not bureaucrats. So what happens, right? Very predictably. First of all, the prime minister goes ballistic.
Yep.
He says, this is just unacceptable. It's an unparalleled display of independence of a central bank, as if that's not the entire point of central bank independence. And what happens in markets? The Nikkei gets crushed, drops 20%. The politicians, predictably in Japan, freak out and they demand a return to zero. And 7 months later, Hayami retreats. He completely capitulates and moves the rate back to zero. And probably not surprisingly, soon thereafter, he's out of a job, right? So that we can think about the journey starting there. Let's fast forward 18 years, December 2018. Let's talk about our own country and what I think is the greatest reversal of monetary policy in our country's history. And I say that when I measure it based on the swiftness of the reversal and the impact of the reversal. So we're December 2018, Fed meeting day. The markets are down 8% for the month, so nerves are frayed. And Powell comes out of the meeting and he says, the balance sheet runoff, so coming out of QE, it's on automatic pilot. And with those two words, the market just loses its mind. It just drops 5%. Trump says he's going to fire him. And things kind of go ballistic at that point. And I don't know if you know this, but Fed policy is that the day after a meeting, nobody in the Fed's allowed to talk publicly, but the day after they are. And at the very first opportunity that Powell has to walk back his remarks, he saves face, doesn't do it himself, but he trots out Williams, who's the Fed president of New York, and Williams says, plans are not promises. We will reassess the data. The market knows exactly what that means, and it rockets up 15% in the next month. So like Hayami, complete capitulation. Hayami took 7 months. Powell took 2 days, right? Let's do one more. Let's fast forward to last March. The ECB, Christine Lagarde, is in charge. Let's talk about March 12th to be exact. And she is president when spreads on Italian bonds, so what they are essentially over German bonds, they're blown out. And she says her version of risk must be priced. She says her version of automatic pilot. Remember what she said? She said, and I quote, "We are not here to close spreads." Like, are you sure, Christine? The markets go ballistic. During the press conference, spreads keep widening and widening out. She actually doubles down. She says it's not the function or the mission of the ECB to close spreads. She kind of thunders that. Spreads blow out even more. And do you remember what happened? Complete capitulation, except it didn't take Lagarde the 7 months it took Hayami or the 2 days it took Powell. 2 hours. It took her 2 hours. In the press conference, 2 hours after the speech, she completely walks back her comments with the quote, "I am fully committed to avoid any fragmentation. All is okay." Turns out she was there to close spreads after all. And in fact, her capitulation was so complete that the ECB took the unprecedented step of revising the speech with the conference afterwards. They've never taken the remarks of a press conference and appended them to the speech. I think what I take away from these stories is that a central bank can control the supply of their money. They can't make their people value it.
It seems like Hayami, Powell, and Lagarde each felt they had no choice. What's this tell us about central bankers?
Well, I mean, I don't know. I mean, this sequence of Hayami, Powell, and Lagarde, it makes me think of the great philosopher of modernity, Mike Tyson.
Oh, yeah.
Yeah, he was the best at philosophy. And his most famous phrase was, "Everyone has a plan till they get punched in the face." I love that one.
I think of it often.
I think of it often too, and I've been punched plenty of times. I mean, these bankers, they got punched in the face really hard, and they felt pain and they felt fear because they're human. You would have, and I would have also. They got scared. They retreated. I think, though, what it really tells us about the world is that these central bankers, as well-intentioned and as smart and as really good as they are, they're just up against forces far bigger than themselves. I think it tells us that the economic choice they'd like to make of short-term pain for a long-term gain, it's just out of scope for them. I think it tells us that their choice is short-term pain for economic catastrophe and certain political extinction. So they'll just keep printing. I mean, they're just going to keep printing. And that just makes corporate reserves, kind of the point of the conference, just riskier and more volatile. And what it really tells us, though, I think, is the system itself is the problem. The system is so over-levered, so dependent on free money that just a little huff and a little puff and the whole thing gets blown down. Can I tell you just one more story?
Okay.
Okay, so let's go back to Jerome, our guy, right? Last March, he's learned the lessons of Mike Tyson's wisdom. He doesn't want to wait to get punched in the face. And, the markets start to fall. Some people start to lose some money. And Powell's view through his actions, not his words, through his actions, is that no level of pre-crisis irresponsibility, no level of overborrowing, irresponsible overborrowing, no level must be allowed to have consequences. The new Fed mandate is not price stability. It's not full employment. The new Fed mandate, again, through his actions, not his words, is let's decouple risk-taking from the consequences of risk-taking. The new Fed mandate is let's finally, once and for all, institutionalize moral hazard. So to foam the runway for this new mandate, what does he do? Jerome goes out and he starts buying securities at a scale the world has never seen or imagined was possible. He starts buying about a day's worth of US GDP, a day's work. So I want to put that in human terms. All the work, all 350 million of us do. We wake up in the morning, we get our kids to school, we go to work. All of the work of all of us. I picture Jerome kind of getting to his desk, gets the keyboard out, and just like Control P click. All Americans, collective daily labor, he just prints. Now, as I said, I don't question central bankers are well-intentioned. I strongly believe they are. But humans are not supposed to have that kind of power over other humans. In the same way that a stock certificate is titled to company capital, money is titled to human time, Michael. I mean, people sacrifice their time for money, which enables us to trade our time for the time sacrifices of others. That's how it's supposed to work. So a tool that can command human time, the central bank keyboard, Control P, that keyboard steals time. And it steals time from some, particularly and most powerfully the non-asset owners, the most vulnerable. And it redistributes that time to others, most notably the existing asset owners. It adds rocket fuel to wealth inequality, and it leaves the fidelity of the signal content of prices just in tatters.
Now, I think March 2020, that was the wake-up call for me. That you're a very sophisticated macroeconomist. I was oblivious, but that was like the massive jolt of some kind of macro shock that caused me to stop and decide that maybe I needed to take an interest in all of this. And what you've described is pretty sobering. I didn't really know the history like you do, but it's clear now the challenges that central bankers face, and it's pretty clear that we are over-levered as an economy. So I guess the question is, what's Bitcoin got to do with any of this? And what's Bitcoin got to do with corporations?
I mean, a lot. I mean, in my view, kind of everything. I can start with the conclusion. I'll work backwards.
Okay, I like that. Give me the answer.
Yeah, I'll give you the answer. The answer is Bitcoin is not volatile. That's the answer. And let me explain, okay? Learning Bitcoin is like, at least to me, it's like, for me, it was like learning a foreign language. You live in Spain for a year, or you live in France for a year, and at some point you get good enough. It takes some time, but with immersion, you think in Spanish, right? You think in French. Something clicks for you. You make that switch. You're no longer thinking like, how do I say, where's the barber in Spanish and doing that English to Spanish translation in your mind. You just think the question in Spanish. I now think in Bitcoin. Okay, it's taken me 8 years of morning study. You are much faster than me. You know, I'm a slow learner, but I get there. It's taken me 8 years of morning study and a lifetime of lessons studying the markets. But I now think in Bitcoin, and it's very freeing. And through that lens of thinking in Bitcoin, Bitcoin is not volatile. Fiat is volatile. The price of college is volatile, and fiat keeps getting cheaper in Bitcoin. The price of prime real estate is very volatile, and fiat keeps getting cheaper in Bitcoin. The price of all of my long-dated denominated liabilities, like a mortgage or retirement, or we do a lot of work with insurance companies, they're long-dated fiat-based liabilities, a death benefit for life insurance contracts or annuity payments. Those are extraordinarily volatile in fiat, and they each keep getting cheaper in Bitcoin. And so to understand really what's going on and why this is happening, I think we need to ask ourselves two things. One, like what is money? Like what is it? And why is Bitcoin an excellent money, or even is it an excellent money? So what's money? Money is technology. It is, and it always has been technology, whether it was seashells or salt or cattle. It's always been technology. It's technology for making our wealth today available for consumption tomorrow. And virtually all of us, Americans, we just take for granted that there's a sharp line of distinction between what's a money and what's not, but that's false. There's not a line of distinction. In fact, throughout history, various monies, plural, have always coexisted along a continuum of soundness, meaning good money to kind of bad money. And they've always been subject to competitive network effects, like any competition. In fact, English language and language for humans in general, that was the first network, and money was the second. It also means that given enough time, and at any given time, including right now, no money is absolutely the best money on all dimensions. There are always trade-offs. Some are better, some are worse, some are better at this, some are better at other things. It also means that all money is temporal. No money has ever been or ever will be forever, including Bitcoin. Bitcoin will not last forever. It may last 100 years or 250 years. I mean, maybe forever for practical terms for everybody at this conference, including you and I. But it will not last forever because money is just a good, like any other good. But what makes money as a good unique among all goods is that we value it not for its own sake, but for its prospective exchange utility, which means we hope the vessel, whatever we choose to store our money in, we hope that vessel keeps its value long enough so we can trade it in the future for stuff we actually want, right? Nobody actually wants green little pieces of paper. Nobody actually wants Bitcoin. Nobody actually wants Bitcoin either. What we want those things to do is to hopefully allow us to trade them for things in the future we actually want, a vacation, a college education, property, whatever, right? So it's not that we want the money. We don't want the money. We want what the money can do for us in the future, what we can trade it for.
So then why is Bitcoin excellent money?
Well, I think that's for everybody to make up their own mind. I'll tell you how I think about it, though. There's really two primary dimensions that I think money should be evaluated on: salability across time and salability across space. So salability across time just means, will a money keep its value through time, or will it depreciate? The oldest fiat money that's in existence today is the British pound. And 371 years ago, when kind of the modern British pound started, it was equal to 1 pound of silver. 1 British pound bought you 1 pound of silver. Today, do you know what 1 pound of silver buys you in terms of British pounds?
I'm guessing that it buys you more than 1 British
More than
pound.
1? A little bit, 174. So you used to buy 1 for 1. Now a pound of silver buys you 174 British pounds. And the key here is to understand what changed and what did not change, okay? The silver itself did not change. 371 years ago, it weighed a pound. Today, it weighs a pound. 371 years ago, the silver had certain chemical properties. It's got the same chemical properties today. The silver did not change. The fiat changed. It depreciated more than 99%. So silver crushed fiat.
I hate the 99% number. I just hate that one.
Yeah, I just didn't want to take it out to that many decimals. But it's 99.763812. I don't know. It's a lot. It's basically worthless, right, relative to silver. But people talk about gold. What about silver versus gold? I mean, and the reality is gold has been far better and far more reliable. It's a much better store of value than silver because it's scarcer and it's got a much lower supply growth. Gold grows at about 2% a year. Silver grows about 20-30% a year. So gold is a much better money than silver, but let's compare it to Bitcoin. I mean, gold still does grow. You print through mining, you print gold at about 2% a year, and Bitcoin's on an asymptotic journey to 0% inflation per year. So 2% a year, roughly times 50 years, and gold essentially depreciates completely versus Bitcoin. So Bitcoin will be worth far more than gold in the future once it clicks for people that gold is printed at a much higher rate, and that compounds, much higher, 1 or 2% a year, but that compounds over 10, 20, 30, 40, 50 years. But there's another property of gold that makes it weak relative to Bitcoin. And in fact, this is a property of Bitcoin that makes Bitcoin truly unique among any money in history, which is that Bitcoin is the first store of value ever in which its supply is entirely unaffected by its demand. If we take the example of gold to prove this point, if gold went to, I don't know, $100,000 an ounce, so up 50x overnight, you and I know what's going to happen tomorrow morning. The miners are going to get to work very early, right?
I'd be mining it.
You and I would drop the phone and start mining, right? We're going to start mining. We're going to look around our house for gold. We're going to melt it down. We're going to drive up the supply. We can't skyrocket the supply, but we're going to drive up the supply. We're going to drive down the price of gold. If during the course of this conversation, people really feel like bullish on Bitcoin and Bitcoin goes to 1 million, I'm saying that with a smile, what's going to happen to the supply of Bitcoin? Nothing. Nothing. That's incredible. That's incredible. Bitcoin is the first store of value in human history where its supply is never, can never, will never be affected by any amount of its increased demand. So the conclusion is that Bitcoin is better at being gold than gold because it's more saleable across time. Now, the other characteristic about money that's really important is salability across space. Like, can you move the money around the world efficiently? And this is another place where gold has a really acute flaw. It's just hard to transport. I mean, forget paper gold, because then you're back in sort of fiat land and all the problems of fiat. Gold is just hard to transport. And this is where fiat, for all its flaws, and fiat's DOA, but for all its flaws, fiat really shines here. You can move it around the world. And in a sort of an internet world where network power is everything, this ability to sell across space is critical. However, I want to clear up a pretty common misperception, which is that Bitcoin is slower than fiat. The reality is the opposite. Bitcoin moves much faster across space than fiat. The key, though, is to compare apples to apples. Final settlement. And in final settlement, there's no comparison. Bitcoin increases our capacity for final, for example, international settlement by 500,000 transactions a day and completes the settlement with finality in about an hour. In international settlement, you're talking 2, 3, 4, 5 days, 7 days. It can be a month. It depends on the two countries. And you may not get there. And even within a country like ours, Michael, don't confuse the speed of your Visa payment with its final settlement, because it's not finally settling. When you go to Starbucks and buy coffee with your Visa card, no final settlement occurs. What actually happens is your bank and Starbucks bank, they have some credit risk to each other for 2 or 3 days. Usually it's fine, but sometimes with disastrous results. And then there's final settlements. Bitcoin settles every hour, and it's a bearer instrument. It's the first ever electronic bearer instrument. So credit risk is not a concept. We said earlier that Bitcoin is better at being gold than gold. What we're saying now is Bitcoin is better at being fiat than fiat. It's more saleable across space. And because it's not debt, like fiat, it has no credit risk. So the conclusion is that Bitcoin is the best money we have. Maybe it's the best money we've ever had. And that's why I've learned the language. That's why I now think in it.
Okay, I get it. It's pretty clear when you say it that way. Bitcoin's just better money, but it's not only money. And I obviously agree with you. However, I have a related question. Even if we agree that Bitcoin is better money, it comes at a cost, Bitcoin's use of energy. How do you think about that?
I mean, I think about it a lot. And I think that, if people take nothing away from our conversation, I hope they take this part away about how I think about Bitcoin's use of energy. Let's start with some facts, okay? Bitcoin consumes a ton of energy. The amount of energy that Bitcoin consumes, you can think about it as the sum of all the mining equipment in the world. And there's no central registry for mining equipment, so we don't really know exactly. But I think an excellent estimate is about 10 million humans worth of energy. So it's enormous. And in a warming world, how can this be good? Well, let's set some context. Like, what is the problem of energy? What are we solving? It's never been its scarcity. We can produce tons and tons of energy. It's always been our ability to channel the energy geographically. That means to move it where it's needed most. And before Bitcoin, that was always where humans lived. We needed to move the energy to where humans lived. But Bitcoin's mining energy, it's just solving a different problem. It's solving a math problem, not a transportation problem. And because of satellites and wireless internet connections, a math problem can be solved anywhere. So Bitcoin mining can be located anywhere. And, the long-term implications of this, I think, are world-changing. So for example, Bitcoin can make monetizable, isolated energy sources all over the world. I mean, think about waterfalls or running rivers, or we can create dams in places that are, now entirely untapped because they would be cost prohibitive to move that energy to the electric grid near where residential or commercial uses would be possible. It's just cost prohibitive. So here's the key insight. As Bitcoin's price rises, it's high enough now, but as it continues to rise, Bitcoin mining will be the most profitable use of energy in human history that does not need to be located near human settlement to operate. That's a big deal. Bitcoin is going to fundamentally change the economics of energy. And that's because with Bitcoin mining, we've got a highly profitable use of energy that's location independent. We've never had a highly profitable use of energy that was location dependent. Now we do. And since fossil fuels, they're already too expensive for Bitcoin mining, I think I think confidently the only long-term profitable Bitcoin mining will be powered by clean energy. So imagine a future, just imagine, where Bitcoin mining firms, unsubsidized, and I think that's key, are in extraordinarily isolated locations. I don't know, let's visualize a waterfall, powerful waterfall in a population-free part of an African country that's destitute, people living in abject poverty. And we can easily connect that waterfall to the Bitcoin network. We can build the energy infrastructure to monetize the local clean energy source for Bitcoin mining. But once we've got the infrastructure, let's extend it. Let's build roads. Let's build houses. Let's build schools. Let's build human settlement. Let's move humans there. And I think the net result will be more and more of humanity clustering around cheap, and cheap is key, clean is key too, energy sources. Historically, our challenge with energy has been to move the power to the people. Bitcoin will allow us to move the people to the power. Now, you think about the world's major population centers. I'm in New York, you're in Miami, think about Tokyo or Paris or London. They developed where they are geographically because of natural seaports or trade routes or waterways. The placement of those cities had nothing to do with energy because they were all pre-energy, right? They were all pre-fossil fuels. With more and more of the world's population now able in the future with Bitcoin to congregate around abundant energy, and this is the key, with extraordinarily low marginal costs of production, That's the part that matters, because cheap energy, no matter the form, equals human flourishing. That's an equation. Cheap energy equals human flourishing. And we can sign all the climate accords we want. We can add our name to anything. We can virtue signal whatever we want. Sign them all, right? They're all irrelevant. They've been irrelevant. They will be irrelevant. What's relevant is this. Because when you have people with a profit motive, and for the first time ever, we have a huge pull towards clean energy with a profit motive, that's when things change. So from my perspective, beyond the revolution in monetary policy that Bitcoin already represents, Bitcoin also represents the biggest catalyst the world has ever known for the development of abundant, clean, cheap energy. And therefore, one of the biggest catalysts the world has ever known for human flourishing. It's going to take a decade or two, but that's one of the things that Bitcoin can do.
I never really thought about it that way before. It's really pretty amazing. I mean, manufacturing money from clean energy sounds like a better idea than manufacturing aluminum from clean energy.
A little bit.
And you got to imagine there's a lot of countries in the world that have shut-in stranded energy, and they have, and we know you can't move electricity more than 500 miles. So if you could actually literally make money off of stranded energy, you can tap into your natural resources in order to move into the 21st century. I think it's fascinating. Yeah. May take a decade or two to realize the vision, but given the way the economics of mining works, especially as Bitcoin's price rises, I think the energy vision makes perfect sense. It's inevitable. Okay, so big idea, Ross. Okay, going back to Bitcoin itself and your firm, Stone Ridge. What is Stone Ridge doing with Bitcoin? And let's break it into two questions. What are you doing as a steward of your own firm's resources? And what are you doing to help others see what you see?
Well, our own resources, what are we doing? I mean, I don't know if you can read the books in the back. There's a lot of Taleb books. We like Taleb. So I'm going to rephrase your question a little bit, which is, Ross, don't tell me what you think. Show me what's in your portfolio. That's a Taleb phrase. Our reserves are now in Bitcoin. It's been true since 2017. And other than what we keep, for convenience, for salaries and rent and things, cash we need, like fiat, our liquid reserves are in Bitcoin. So how did we get there? I think great questions are underestimated. And I think we got there through a great question that our team asked, which is, what do we have to believe to be true to move to the Bitcoin standard? What do we have to believe to be true to move our reserves from fiat into Bitcoin? And our answer was that if we allow ourselves to focus only on point-to-point risk, meaning point-to-point in time from today until our long-dated fiat liabilities are due. And remember, we're a corporation, so theoretically infinitely lived. Of course, we're not actually infinitely lived, but yes, we have salaries and rent next week, but we have salaries and rent in 10 years and 20 years and 30 years too, so we can think about those liabilities. If we just think about point-to-point, the only thing we really have to believe is that over the next 10 or 20 years, that the dollar will depreciate relative to Bitcoin. And I believe that. I have no idea what the dollar is going to do tomorrow, next week, next month, next year, but I have a high degree of confidence, and I voted with my dollars, not certainty, but a high degree of confidence that the dollar will depreciate versus Bitcoin over the very long term, as it has 80% depreciated in the last 2 years, as it has 30% depreciated so far this year. So this insight allows us to ignore US dollar volatility along the way, focus on point-to-point, focus on end-state economics. Now, like anything in life, a point-to-point perspective doesn't make it a risk-free perspective, but it is our perspective. And the net result has been, and I believe will be, enormous competitive business advantages, certainly relative to other firms in our sector and financial services. I mean, for us, everything's getting cheaper, right? So paying rent, paying salaries, M&A, recruiting. It's just it's all cheaper. And the stock market's making new highs every day. For us, everything's on sale, right? So abstracting from Stone Ridge, though, if you take company A and company B in the same industry, one adopts the Bitcoin standard and one does not, just think about the macro environment. As the money printer goes burr, if it continues to, I think it will, as credit creation just continues to explode, as real rates on riskier and riskier assets continue to go negative, and we cross the Rubicon when real rates on corporates went negative recently, consider the implications for the dollar in 1 year, in 2 years, in 10 years. I don't know. Lower? A lot lower? Certainly versus Bitcoin. That's my view. Versus the yen, versus euro. I don't know, but certainly versus Bitcoin. Remember at the very beginning, we talked about every CEO's most important job? Capital allocation. The decision of whether and how to adopt the Bitcoin standard. I believe that will be the single most important decision every CEO makes in the next 10 years. The most important decision, whether they realize it today or not. And I acknowledge well under 1% would acknowledge that's going to be the most important decision they make in the next 10 years, but it will be. And whether they actively make it or not, they make it. They make it with high consequence.
Okay. So the second part of my question is, what are you doing to help others see what you see?
Well, for a while we were trying, and nothing was actually happening. I recently learned how bamboo grows. It's pretty, to me, it's pretty fascinating. It spends its first 5 years building an extensive root system underground and basically doing nothing visible, and then it explodes 90 feet in the air in 6 weeks. That's bamboo. It's not a terrible analogy to NYDIG, Stone Ridge's Bitcoin subsidiary. We started in 2017. We put a great team together. We had a bunch of capital. We worked and worked and worked. We laid our root system. We operated we operated in stealth. It's true that we operated in stealth, but it's almost as if it didn't matter that we operated in stealth because no institutions really cared, and it wasn't for lack of trying. We knocked on a lot of doors. We were just too early. We were just too early. But, we kept at our craft. We built our root system. We thickened and strengthened the roots. And we worked quietly, out of view, which is our style. The firm, has had a no press policy since its inception in 2012. But if you fast forward to today, NYDIG is a full service, vertically integrated, Bitcoin only financial services firm. The first billion during that dark, challenging 5 years, it took 1,200 days to raise that first billion.
First billion's always the hardest.
First billion's always the hardest, 1,200 days. The last billion took 6.
6 what?
A year ago, we had 25 institutional clients. Today, we have 280 institutional clients. We've got a pipeline in the onboarding process of 96. We can put 75 institutions through the pipe a month. That's our current capacity. We've got over $6 billion in Bitcoin now between what's in the door and what's committed from institutions. And we are vanguardizing this asset class. Best product, best price. And as we scale, we're driving prices down, down, down. Our pricing today is 70% lower than it was a year ago. And by the end of the year, Michael, I am confident we'll have over $25 billion of Bitcoin. I've just got this order book. I'm not guessing. I see what's happening.
Okay, $25 billion. Yeah, that's astonishing growth, and it matches what I suspected, but I didn't know is going on with institutions and Bitcoin. Given NYDIG's role in the Bitcoin ecosystem, you have tremendous visibility into what all sorts of institutions are doing and how they're adopting Bitcoin. So what can you tell us?
Well, I mean, the one-liner is all kinds of institutions are adopting Bitcoin. Public companies, private companies, hedge funds, private equity funds, credit funds. I mean, even investors who, if you asked me a year ago, would they come in? I'd say absolutely not. The most conservative, but also the most sophisticated, most careful investors in the world, AAA and AA life insurance companies, AA P&C insurance companies today have more than $500 million of of Bitcoin exposure through NYDIG, and I know for sure because I'm not guessing, they're just getting started. And these institutions want to do more than just own Bitcoin. That's table stakes. Within a year, America is going to be able to get a portion of their income annuities paid in Bitcoin. Americans will be able to get a portion of their salaries paid in Bitcoin. You want that paltry interest on your CD paid in Bitcoin, you'll be able to get that too. There's going to be an explosion in Bitcoin-driven financial innovation. Another interesting phenomenon we're seeing in our book is exactly 0 clients have walked back their allocation. And that may not be true for other firms, but that's true for us. So once people get off 0, they either stand pat or they increase. Now, I don't want to overstate this. It's been a year, but that's what we're seeing so far. And another phenomenon we're seeing is among family offices. So a year ago, we had 0 family offices. Today, of our 6 billion, 2 billion is from family offices. And the average account size of a high net worth individual is $7 million. So yeah, we serve retail, but the average account size is 7 million.
So the breadth of adoption across institutions and the increasing adoption within a given institution. Shocking, not surprising.
Yeah.
It does seem to be, it's a one-way trade. That's the way I see it.
No question.
You're moving in that direction. So, I don't think of it as a crystal ball, but what does the future of Bitcoin hold? And do you think it's too late to opt in? And I'm interested in, I know I have my opinions, but what are your drivers for the price over the next few years?
Well, I definitely don't have a crystal ball, but I think, at least from a framing perspective, I'll tell you how I think about it. I think about the first chapter of Bitcoin as kind of the Genesis block until, let's call it now. And that's been all about Bitcoin, the asset, which is really the theme of this conference. And what's driving right now accelerating institutional adoption is the view of Bitcoin being de-risked, right? And I think that's why you're just going to see a wall of money. I know it. I have an order book, a wall of money coming into the asset class. So let me put you to sort of frame this out in the mind of an institutional investor, me. Okay, I'll put you in my mind. My partners and I bought more Bitcoin in 2020, last year, than in 2013 through 2019 combined. Okay, and as our fiat businesses continue to inflate and accelerate, which they are, I expect we'll buy more Bitcoin in the next 2 years and than we did in the previous 8. So what's going on? I mean, we're conservative, institutional, professional risk managers. It's what we do for a living, and it's why investors, including the most conservative investors in the world, have entrusted us with $20 billion in our alternative businesses, our non-Bitcoin businesses. And to us, conservative us, Bitcoin is de-risked. Why? Well, when I look at Bitcoin, I see it above $500 billion of market cap. I see millions of people using it every day with a clear line of sight to tens of millions of people using it every day, and then billions. I see 12 years of uninterrupted, safe operation of the network. And when I look at all that, the left tail of the 0 outcome is gone. And that is the key observation. So when I talked to institutional investors a few years ago, I would get the question, what's the chance of Bitcoin going to 0? And a few years ago, that was an interesting conversation. Last week, a client asked me, what's the chances of Bitcoin going to 0? I said, what's the chances of Christianity going to 0? Like, it's just not. Like, it's just left. It's left the station. And so remember, at Stonebridge, we are risk managers. We do it professionally. And what you're talking about here with Bitcoin is an extraordinarily asymmetric upside asset. We can debate whether it's good or bad, but I think we can't debate the asymmetric upside to it. It's perhaps the most asymmetric potential right tail asset in the world, in history. And you chop off the left tail, we all know what happens, right? To the mean, it just explodes. It explodes. You chop off the left tail, the mean explodes. And you combine that with the macro environment, the money printing presses running at full tilt. I mean, the blue wave in the US, complete political dysfunction around the world. I mean, for us, at least at Stonebridge, fiat reserves are like a hot potato in our hand. We make them in this business. We can't get them out of our hands fast enough and put them into Bitcoin. We can convert them as quickly as possible. So yeah, we're risk managers at Stonebridge, but we're also capital allocators. You can't eat risk management. You can eat making money in the markets. And we believe in the power of Bitcoin, but if we didn't think we'd make money, we wouldn't invest a penny.
So you're calling chapter 1 of Bitcoin 2009 through today, Bitcoin the asset. And I guess that really is the process of going from 0 to 1. Bitcoin didn't exist. Now it does. What's chapter 2?
Well, I think chapter 2 is going to be incredibly exciting. And chapter 2 builds on Bitcoin the asset, and it adds Bitcoin the network. In chapter 2, Bitcoin the network, it solely leverages Bitcoin's proprietariness as an open source monetary network. In chapter 1, we reached millions. In chapter 2, we're going to reach billions, and we're going to do it quickly. And chapter 2 starts right now. So I'll give you a flavor of chapter 2. Say I want to send $1,000. I'm sitting in New York right now to a friend in Milan, Italy. Strike, Jack Mahler's firm, working with NYDIG, takes my dollars and delivers them to my Milan friend in euros instantly and for free. What? Like, how did this happen? So let's go slow. First, Strike takes my dollars from my bank account, my $1,000, and they debit it. That's a millisecond. Second, Strike works with NYDIG and we do a trade. We convert the $1,000 into Bitcoin. It's another millisecond or two. Third, Strike works with Lightning Labs and it zips the Bitcoin across the Atlantic Ocean to Milan. We're still in single digit milliseconds, basically instantly. Over there's another FX trade. NYDIG converts that Bitcoin into euros. We're still in milliseconds. And finally, Strike credits my friend's bank account with final settlement in euros. Done. So what just happened? What just happened is $1,000 were moved from me in New York to my friend in Milan and converted into euros instantly and for free. How? Because for the first time in history, we have an electronic bearer asset. We've never had an electronic bearer asset. It's called Bitcoin. And an open source monetary network, which we've never had before. It's also called Bitcoin. That together can achieve cash finality anywhere in the world, anytime, 24/7, 365, with liquidity in any currency pair you care about. And notice something critical in the transaction I described, critical. The volatility of Bitcoin, the asset, was nowhere to be found, right? Why? Because we didn't use it. We didn't use Bitcoin for its properties as an asset. We use Bitcoin for its properties as an open source monetary network. Now, I gave you an example of two friends moving $1,000 from New York to Milan. That's cute. It's adorable. Imagine the entire global import-export industry with instant and free international settlement, right? Imagine the entire global remittance market with international and free global settlement. Imagine the entire global credit card industry with no merchant fees, right? I mean, use the open source networks of Bitcoin and the open source networks of Lightning. And Bitcoin, the network, will change the way we all interact and connect. This part, chapter 2 of Bitcoin, this part has nothing to do with monetary policy. This point has nothing to do with central bankers, with dollar depreciation, zero. However, there will be this virtuous, beautiful feedback loop between Bitcoin the asset and Bitcoin the network, and Bitcoin the asset and Bitcoin the network. And working together, the Bitcoin the asset specialists at NYDIG and the Bitcoin the network specialists at Strike and Lightning, they're going to get this chapter 2 flywheel in motion, and it is going to hum. It's going to hum. So just stay tuned for more.
Okay, that's awe-inspiring. I'm really excited. World-changing. Bitcoin as the greatest force for good in the world kind of stuff. What do you think stops so many people from seeing it?
Well, I think that it is awesome. It is awe-inspiring. And I think we just live in such a cynical age with so many people devoid of feelings of awe. It's just kind of beaten out of us. I mean, I'm grateful for many things about Bitcoin. I think one of them is it's just wonderful that I need not be among the people who are devoid of feelings of awe. I think that relates to another question, which is why people underestimate Bitcoin so much. And what do they underestimate most about Bitcoin? And that one's easy, right? That's easy. The ferocity of the Bitcoin community for Bitcoin. That I can tell you that is underestimated. I don't speak for the community, I speak for myself, but I think there are two core views of the community. The first view, we'll call it the individualist view, is that money is not the root of all evil. Money is a root of all sovereignty. It's the authority to act in the world as we see fit, as long as we don't harm others. Money is a property right. And since we've traded our time for money, when money is printed, our time is stolen, and that is not okay. The second view, I would say, is the community view. Money is the greatest force for good in the world today. It's an arc. It's designed to help the most vulnerable, the most unprepared, escape the accelerating fiat flood. And it's raining outside pretty hard. So let's get as many of those living on society's fringes, not just in the US, but everywhere. Let's get them in the arc. Let's get them in the arc as soon as possible, and nothing is more important. What I would say, though, is that these two views of the Bitcoin community, they're not mutually exclusive. And in fact, every single Bitcoiner I know holds both of them in their minds. You know, one of the things that really got me going, and a lot of Bitcoiners going, was last March when Kashkari, who's president of the Minneapolis Fed, he said, there's an infinite amount of cash in the Federal Reserve, an infinite amount of cash in the Federal Reserve. You could almost hear the other 11 Fed presidents saying, shh, Neil, you're not supposed to say that part out loud, right? The American people are really smart, right? They may not have gone to the same schools as Neil or worked at the same firms as Neil, but they're smarter than Neil. And one thing they definitely can do, they can do division. If I got $50,000 of life savings, I don't really know what that 50,000 is out of, but I have a sense, right? And now the guy in charge of the money is telling me the denominator is infinity. I don't need to know calculus or theory of limits to know that my 50,000 divided by infinity, that means my 50,000 bucks is worthless. Why would I hold my life savings in something with infinite supply? I mean, I might as well go to the beach and exchange it for grains of sand. They're an infinite supply too. So I think what Kashkari is really telling us is that fiat should come with a warning label, like cigarettes comes with a warning label, but instead of the cigarette label saying, you know, these are bad for your health, the fiat warning label would say these are bad for your wealth, right? And the cigarette pack has this, you know, this skull and crossbones on the outside. I'd like to see the Treasury start printing the infinity sign on our cash. So if you got a $20 bill, under the numbers in all the corners, it would just, you know, have a red warning label that says divide this number by infinity. Remember, as I said earlier, a central bank can control the supply of money. They can't make their people value it. So, you know, I think that Bitcoin is massively underestimated. I think that's understandable. I mean, I think you underestimated it. I underestimated it. Until we go deep down our own version of the rabbit hole, it's underestimated. I mean, the financial establishment underestimates. Again, I did until I didn't. You know, I give them all mulligans. They just haven't put the time into it. I mean, Jamie Dimon calls it a fraud, right? Yet it's much more real than fiat. Larry Fink calls Bitcoin an index of money laundering. I think it's more akin to an index of money printing. Warren Buffett calls Bitcoin rat poison. That one's shameful. That one is shameful because Bitcoin is giving life, not taking it. It's giving life right now to tens of thousands in El Salvador and Pakistan, Venezuela. It's giving life. It's not taking it. And soon to be millions, and with Strike and NYDIG and Lightning, soon to be billions. So fraud, money laundering, rat poison, Bitcoin, it's just intellectual laziness. I think people also underestimate just how unstoppable it is. Bitcoin is just unstoppable. I mean, it'll have fits and starts as it has, of course, that's for sure. But it is here to stay forever. And that's for a simple reason that it's open source. It's open source. I mean, China, last time I checked, pretty powerful place. They basically banned it. Price rallied in their face. India basically banned it. A lot of people live there last time I checked. Basically rallied in their face. Pakistan banned Bitcoin, banned mining. It all went underground. Usage exploded. Mining in Pakistan after the ban exploded. It was so profitable to mine in Pakistan that eventually the government themselves, the province, started a Bitcoin miner, and they changed the legality of it. So, you know, these are three of the four most populated countries in the world. Effectively kind of said Bitcoin's banned. We're making new highs kind of even as we speak. And I think about our own country. I really don't think a ban is in store because I don't think it's possible, but we can just go there for a second. Let's just say the US banned Bitcoin. It wouldn't stop it. It would accelerate it. Remember, we kind of tried this once in 1935. We did actually ban and confiscate gold. Remember what I said before? You actually could do that. You can't confiscate Bitcoin. You could. And in the ensuing period of time till today, the dollar's depreciated about 85% versus gold. So it didn't work. I imagine trying prohibition today, right? I mean, that's alcohol, and it would be unenforceable. Can you imagine trying to ban people from holding their own money? I mean, forget it. No way. And it won't happen anyway because it's private property. And we've got pretty good rules in our country about private property. And it might even be speech because it's code. So it might even be protected by the First Amendment. But regardless, Michael, none of this matters. None of this matters. Because with regards to confiscation, if you really boil all this down, what is it? It's just a password. It's just a password to a private key. And that password can easily be stored with phrase memorization in my head. So confiscation's off the table. Remember, gold has a vault. You can take the vault. Good luck confiscating my memory.
Yeah, and given all of this, it seems like individuals and corporations are being forced to take action.
Yeah, look, I think everybody now has a choice, which is a good thing. And it's a choice they make, you make, I make, and everybody gets to make on their own. You can stay on the fiat standard that's available, in which some people get to print new units of money in unlimited size, just not you. Or you can move to the Bitcoin standard, in which no one gets to do that, including you. We finally got a monetary system governed by rules, not rulers. And given that I've made my choice, you have to make yours, and everybody at this conference has to make theirs. I will tell you, I am working tirelessly towards a future with a globally adopted, inflation-proof common currency for the world, one that billions can opt into as their peaceful weapon of choice. You know, Satoshi solved the Byzantine generals problem. Bitcoin solved the military generals problem. And when you think about trends in anything, you're a tech guy, all you got to do is follow the brains. Even more than the money, the brains know first. Where are some of the smartest people in the world shifting their careers to focus? Where are some of the best developers in the world going? They're going to Bitcoin. And I'd never underestimate the power of a mass movement of developers. And don't underestimate the ferocity of the emerging decentralized class, us Bitcoiners. I mean, just like early encounters with the printing press and antibiotics and aqueducts and the internet itself, they were incalculably underestimated. People incalculably underestimate Bitcoin. Totally understandably. But you, Michael, MicroStrategy, your colleagues, I think you're doing everybody an incredible service by having this conference, by having this talk, and creating a platform for these ideas to be introduced. So look, you've just heard from a guy with a background in financial services and a background in Bitcoin. I straddle both worlds. So I offered my perspective, but it's only my perspective colored by my experience. You're a fellow founder, you're a fellow entrepreneur, you're a fellow CEO. You've got your perspective. You're a tech guy. You know, what do you think about this? And what do you think I've said and what I've missed?
Well, you know, Ross, I think there's clearly a macroeconomic wind that's blowing. And I don't think any corporation can afford to ignore it anymore. We've all got to act. You've acted. MicroStrategy's acted. The reason we're having this conference is to help everybody else figure out what they should do. And I want to thank you for sharing all this. This has just been mind-blowing. It's just awesome. I'm just so inspired. And I didn't realize there are so many institutions that were moving into this space as aggressively as they are. What a difference a year makes. Yeah. So I guess we'll wrap our session right now. And I want to thank everybody that's been with us for this session. And we'll pick up with our next session on corporate strategy and Bitcoin in 5 minutes. But Ross, thank you for everything.
Great to chat with you, Michael. Good to see you, as always. Take care.
Likewise.